Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Kristi.
Hey friends, it's Kristi, your credit coach. Thank you so much for joining me for another episode. Today, let's answer the question, when can your interest rates go up? So there are only a few reasons why your credit card interest rate, or APR, can go up. So let's address those. The main reason people are seeing their APRs going up right now is because you have a variable rate. Way back in the day when credit cards were becoming a very common thing, the interest rates were fixed. But then those creditors realized when interest rates change, they weren't benefiting from rates going up. And so the norm these days is that most credit cards are variable instead of fixed. So what does that mean? That interest rate, or APR, is tied to the prime index rate. And the prime index rate is tied to the federal funds rate, which, by the way, went up 7 times last year. The Fed is meeting again in February, and there's a really good chance that they will increase that interest rate again, hopefully this time only 25 basis points, which is equivalent to 0.25%, where the last few times they've raised it 0.75%. So there's a very good likelihood that the interest rate on your credit card has gone up a few percentage points. Now, it's the responsibility of your creditor to send you something in writing that notifies you of this increase on the interest rate, and they have to wait 45 days before that change can take effect. So why else might your interest rate go up? If you are 60 days late or greater, you will experience a penalty APR. This is where your creditor will increase your interest rate, either for what you had qualified for or if there was a promotional rate, and you will pay this penalty APR for the next 6 months moving forward on new purchases. After 6 months, you can request for that penalty APR to be removed. Another reason why your interest rate may be going up is a promotional rate is ending. So you see the advertisement all the time, a 0% on a balance transfer for a certain amount of months. And if that term is coming to an end, your rate is going to default to the interest rate that you've agreed upon when you took that new credit card or agreed to that promotional rate for, say, a balance transfer or a specific purchase. The greatest example that you've probably experienced is from furniture stores that offer 0% financing for a certain amount of time. Keep in mind, if you have any balance at all left at the end of that term, they often will charge interest all the way back to your original purchase price and on that entire amount, not just your remaining balance. So either read the fine print or call that creditor and find out, because if you have any remaining balance at the end of that promotional term, you might get slammed with hundreds and hundreds of dollars in interest. That happened to me back in the day. I learned it the hard way, and it's not the way to learn it. And then another reason why your interest rates may have gone up is because your credit score has dropped substantially. If this is the case and your creditor taps into your credit to see what's going on with your credit scores, they can increase your interest rate, but not on your existing balance. Again, they have to send you a letter, and they cannot make that change until after 45 days from that letter, and it will be on purchases moving forward. So again, not on your existing balance. Now, if you call your creditor and you say that you choose not to accept this, their only alternative then will be to close your credit card. So please don't call them and say that you don't agree with this and you do not accept it, because now you'll have an outstanding balance and a zero limit, and it can really have a negative impact on your credit. My recommendation in this case, if your interest rate has gone up because your credit score has come down, is work very, very diligently to remedy whatever caused your credit score to go down. If it's because you are overutilizing your credit, which means you've maxed out your credit cards, then work very diligently to get those balances down so your credit score can come back up. If there's a new collection, see if you can get that paid off and closed or even removed. Or if it was due to a late payment, figure out a way to make those payments on time moving forward, because if you've listened to any of my past material, you know that your payment history makes up 35% of your overall credit score algorithm and has a tremendous impact on your overall credit score and credit profile. So one thing to know, just in case you're wondering, if you're late on one credit card, can it affect your other credit cards? Not necessarily. The Credit Card Act of 2009 had banned what was referred to as a universal default, which means if you were late on one credit card, all of the other ones could kind of penalize you for it. So that universal default has been removed. However, if there is a substantial decrease to your credit score, it can have an impact on your APR moving forward with new purchases with your creditors, because your credit profile is a snapshot in time of your ability to manage your money well. And if your credit scores are reflecting something very different, your creditors start getting a little nervous. So there is one thing I'd like to share with you. I am seeing a growing trend of people and households that are utilizing their credit cards more than ever. I just read a report earlier today that had shown that credit card balances in November of 2022 had increased 23%. So I can't even imagine how much it jumped in the month of December, which is when most people are out shopping for the holidays. But at the time of this recording, that information wasn't shared yet. But I also think that that increase in November is not necessarily holiday shopping only. I think it's also because rent and insurance and utilities and groceries and just the overall cost of living has grown so dramatically that in order for us to sustain our regular lifestyle, people are trying to extend their income by putting additional purchases on a credit card. And I want to warn you, this can become a very vicious trap. I was just speaking to a past client and a friend this weekend who had shared with me that her credit card bill had gotten out of control and she owes greater than $30,000. Her card is maxed out, and so it's impacting her credit score. And now she's got to take on some version of another debt in order to pay this down because her APR has gotten so out of control because she's maxed out. The prime index rate has increased 7 times in the last year, and she has this tremendous balance with a 20-something% interest. So I just want to caution you to be very, very careful when it comes to an increasing balance. If you start noticing that on your credit cards, we've got to make some adjustments before you find yourself in a position you can't bail out of. Let me give you a quick example. A $5,000 balance at an 18% APR, if you just paid a minimum payment of $100 a month, which is 2% of that outstanding balance, so likely the minimum payment, it will take you 7 years and 10 months to pay that balance off, assuming you don't add any new purchases to the balance. Friends, this will add $4,311 in interest if you pay that minimum payment. $4,300 against a $5,000 balance. And if that APR is 21%, which I believe a majority of people are walking around with APRs in the 20-something%, that same $5,000 balance at 21% interest would take 10 years to pay off with a minimum payment of $100 a month. And catch this, the interest is nearly $7,000 to pay off a $5,000 balance. To be precise, that interest would be $6,986.19, just a few dollars shy of $7,000 in interest to pay off a $5,000 balance. It can really sneak up on you. And so I want to encourage you to keep an eye on your finances, keep an eye on those balances. And if you see them increasing every month and you don't have that ability to pay down or pay off those balances, I want to encourage you to create a financial spending plan. Start tracking where your money is going and start seeing where you might be able to cut. Because with credit card APRs in the teens and the 20s, it can grow very rapidly. If you're receiving a lot of credit card offers in the mail and you don't want the temptation, you can log into optoutprescreen.com and it will remove you off of that pre-approved list for credit cards that want to have your business. Thank you so much, friends, for listening. And if we haven't already connected on social media, let's connect. I'm at Credit Kristi on TikTok, Instagram, Facebook, and LinkedIn. And if you have any questions, comments, or thoughts, feel free to reach out to me at questions@creditkristi.com. And until next time, my friends, stay well.